Welcome to the Finance Magnates Blockchain Podcast. I'm Rachel McIntosh, and recently, Finance Magnates caught up with Amanda B. Johnson, the official spokesperson for Dash. Dash has made some large strides towards accessibility and widespread merchant integration since its inception in 2014. We asked Amanda about Dash's plans for the future and how the network's infrastructure affects its functionality. So, Amanda, can you just start it by giving our listeners like the elevator pitch for Dash? Just really quickly, what is it and who is it for?
Sure. So Dash is a cryptocurrency, like many, but unlike many, it is currently under very active and rigorous development to become the first cryptocurrency which does not look or feel like cryptocurrency, because our target audience is the kind of person who's not interested in cryptocurrency.
Does that mean, individual people like, my grandparents who might not, who can't really even use Facebook, like, who are these people that don't really use cryptocurrency?
Exactly. It's grandparents, it's parents, it's neighbors, it's anyone who, for example, does not feel comfortable with the appearance of cryptographic addresses, which I actually think is most people, myself included. Mm-hmm. It's people who are accustomed to the usage of a username and password that should be able to log them into the same account from any device. And that's actually the two features that I just talked about. That is replacing the cryptographic address with a human readable and reusable username, as well as that username paired with a passphrase acting as login credentials to what will effectively be your Dash account, accessible via any device. That is what was just demoed last week. For anyone who's, nerdy, I will just say that you can view that demo if you like on the Dash official YouTube channel. But for anyone who's not nerdy, I'll just sum it up by saying it was a very exciting moment for everybody at Dash, because just to be able to watch a working prototype of something that we have all been, waiting for and investing in for actually 2.5 years was very exciting.
So can you elaborate a little bit more on that? Is that a feature that's available now to the public, or is it just a prototype at this point, as you said?
No, so it is not yet released on what's called mainnet, meaning it's not available for public use, but rather it was demonstrated in what's called Testnet. So most blockchain development teams run what they call a testnet, which allows them to just basically simulate the real blockchain and then develop on it. And so that's where it was demonstrated. And it's slated for public release sometime in the second half of this year, 2018.
Okay, that's really exciting.
Yes, it really is. I really agree. And of course, the first version will be like the first version of really anything, which is, as basic as it gets. And there is a myriad of features planned to be gradually added to it over the months and years after its first release. And so I think that that's something to look forward to as well, because it's not just the replacement of cryptographic addresses with usernames and solving the device-specific wallet that is keeping crypto out of the mainstream. There's so much more that the current banking system offers people that the developers in Dash think that we need to offer as well if we're going to be able to compete in payments, in everyday, let's buy a cup of coffee payments, such as interest-bearing accounts that, for generations and generations, people have kept their savings in bank accounts, one of the reasons for which has been to earn some interest on it. And in cryptocurrency, in Dash in particular, there is, we've not yet reached the point where we're not creating any new coins. meaning that there's still some inflation, and certainly our network is always earning small transaction fees. And so something that is on the longer term development roadmap for Dash is basically sharing in these funds with our customers in the form of what will look to them to be like an interest-bearing savings account, which when you think about it, we find to be totally normal and totally expected in our everyday financial lives. And that's just one example of something that the leadership at the Dash Core group, that's the group that gets treasury funding from the Dash system to develop Dash, that they believe is actually possible to implement right on top of our blockchain.
Okay, so can you tell me are some of the other features that are planned for Dash over the next year or several years?
Sure. So in addition to interest-bearing accounts, what will also come with time is, of course, the enhanced privacy, as well as the easier usage of Dash's instant send feature. And so what I'm talking about right now are Dash's two really end-user features, and that is the ability to receive the equivalent of an instant confirmation on a payment, which makes point of sale possible. And when I say it makes point of sale possible, for anyone who's maybe newer to this space, they might be shocked to learn that point of sale is not ideal for really any cryptocurrency right now. And that is kind of a shocking thing to hear if you've not used it. But basically, nearly all cryptocurrencies function on what's called a blockchain, and a payment made on a blockchain is not considered to be secure until a certain number of confirmations have come in. And confirmations take time. And so when you consider that someone can swipe a credit card or set some cash down on the counter in, less than 2 seconds, you see that cryptocurrency at the point of sale, buying the cup of coffee, is absolutely not suitable.
Yeah.
Which makes it far less useful than most people think. And so actually over 2 years ago, Dash was able to, actually over 3 years ago, Dash was able to break that paradigm when it added a second layer of computers on its network beyond just the mining computers. And they called these computers the Masternodes. And one of the things that Masternodes enable is the locking of a customer payment the moment that it's made. So that in basically under 1.5 seconds, the network gives the equivalent of lots of confirmations, and hence the coffee seller can feel 100% confident that he cannot be what's called double spent. Double spending is when a malicious actor exploits the fact that these cryptocurrencies have to wait for confirmations to be secure. And so before a confirmation comes in, he takes the payment that he originally broadcast to the merchant, and he broadcasts it right back to himself. and effectively is able to steal from the recipient that way. And so so Dash solved that problem over 3 years ago. And so when I was talking earlier about the version of Dash we'll be releasing in the second half of this year with the much prettier to look at end user experience. So our flagship offerings, which are instant confirmations and what I didn't go much into, which is the ability to achieve privacy of your funds, both of those things will need to be integrated with time. And so, so those would also be things to watch for.
Okay, and speaking of privacy, Dash has kind of branded itself as one of the most, or if not the most anonymous cryptocurrency. So what does that mean exactly? Why is it such an anonymous coin?
Sure. So anonymity or privacy rather in Dash is actually optional. And so when I say optional, we just need to understand, first of all, why anyone would ever say that a payment made on a blockchain is not private. Mm-hmm. So these blockchains or digital ledgers, as we could also call them, most of them are what's called transparent. And so if Rachel's address were to send a payment to Amanda's address, and anyone in the world knew that those addresses belonged to us, mm-hmm. which, it is entirely plausible that they would, because maybe someone you've done business before with, rather, you have to give out your address to do business with anyone.
Right.
And so it's really, in most blockchain-based cryptocurrencies, it's very difficult to try to achieve a level of privacy for yourself when, in order to use their system, you have to give away your addresses.
Right.
And as soon as you move funds in or out of one of your addresses, that fact is written to the public ledger for all to see, mm-hmm. for, as long as that blockchain lasts. And so the way that Dash is able to offer optional privacy on our network is to offer users the option to essentially mix the history of any amount of their coins with the history of other users' coins on the network. Because when we talk about there not being privacy on a blockchain, what we really mean is if someone wants to look at where my coins came from, they can look up the blockchain and look back. Where did that one come from? Okay, and then where did the funds come from before they were there? Mm-hmm. And before that? And so what people are able to look up is the history of where coins have moved. And so the Dash Core Wallet, and that's currently the only wallet that offers this feature at this time. Mm-hmm. So the Dash Core Wallet allows you to click a button that says Private Send Mix. And in that moment, your wallet starts talking to other wallets on the network saying, I'd like to mix the history of some of my coins with the history of some of y'all's coins. And whoever else on the network is interested in doing so indicates such. And these, what are called mixing sessions, are actually written to the blockchain. And as that is done, it begins to create sets of uncertainty in basically three. So the first mixing round gives your coins three equally plausible histories. So an uncertainty set of three. Mm-hmm. A second round of mixing would give you 9 sets of uncertainty, and on and on and on until the maximum amount you could achieve for your coins is upwards of 6,500 different equally plausible histories of where your funds came from, and that just makes it, virtually impossible to have any meaningful analysis on the blockchain of the history.
I see. Okay. And then you mentioned briefly before this the Masternodes on the Dash network. So can you speak a little bit to the ratio of ownership of Dash tokens by Masternodes compared to the rest of the network?
Oh, goodness. So that is Oh, I see what you're asking.
Yeah.
Sorry, I was just about to go to bidinfocharts.com.
Oh, okay.
Yeah, so there are around 4,700 masternodes at this time, mm-hmm. and there are just under 8 million Dash individual coins in existence, which means that whatever percentage 4,700 is. Okay, so I should rewind a little bit and realize that not all of your listeners may know what it means for a masternode to own coins.
Okay.
So one of the security features of the Dash network is that the people who get to make decisions, basically governance decisions about our network, as well as funding allocation decisions, are people who own what's called a masternode. And this is a hugely beneficial feature on the network, because something that most other networks are subject to, a risk that they are subject to, is the ability for what's called a node. And a node is basically just a copy of a network's blockchain living on a computer somewhere. And most other networks are subject to what basically amounts to malicious nodes being spun up, if I can use that sort of, whatever techie term, spun up on their network. And what that could mean is that at a relatively low cost, someone who wants to confuse their network or cause it to malfunction could become a major participant in their network by just spinning up a bunch of nodes. And that's not really possible in Dash, because the only nodes which our network relies on for our services, which is the private send and the instant sends that I had mentioned, as well as our governance, like our decision-making process, are nodes which have locked in 1,000 Dash. And when I say locked in, I mean that the people running these computers have to cryptographically prove that they own 1,000 Dash, and they cannot spend or move that 1,000 Dash for the lifetime that they want to work for the network. And so what this gives them, in effect, is a very strong incentive to not try to mess with the network, to not do any malicious actions, basically. And so at this time, because there are roughly 4,700 of them, that means that there are 4.7 million Dash being locked to serve the network. And so, most investors see this as a very, what they would call a bullish sign, in that just over 50% of the total supply of Dash is being, indicated as the masternodes owning that Dash, having such confidence in the future of Dash, that rather than, sell at what, could be a fantastical price compared to when they first bought that 1,000 Dash, that rather than sell, that they are keeping it, they're not touching it, and that it's a bullish indicator to them.
Right. But kind of on the same, on the other hand of that, is that there are perhaps some concerns about centralization of the network, just because, there's 4,700 entities that own a little bit more than half of the network. Is that a concern for Dash?
So when it comes to coin distribution on any network, the best that can be done is rough estimations, basically chain analysis, as well as looking at the volume of various coins on various exchanges, to even try to get a rough estimation of how many entities own what. And so when you compare Dash, rather the rough estimations done on Dash to the rough estimations done on other coins, Dash actually comes out on the higher end of decentralization. And I think the reason for that is actually the fact that masternodes are paid. And so with that incentive there, it actually is continually attracting newcomers to our network. Whereas in a network where nodes are not paid, there's no incentive really for say, just like a brand new investor who, wants to get involved in a cryptocurrency. There's no incentive for that investor to run a node or to keep coins, to keep coins of that network, because there's really only incentive for businesses which are highly reliant on a particular blockchain for their business, for them to run a node. And so it's actually the opposite of what most people think, in that unpaid positions, that's actually what creates centralization over time. And paid positions actually create decentralization over time.
Okay, very cool. So you've mentioned before that Dash is seeking to kind of, target the everyday person who might not be able to use cryptocurrency at this point in time because of technical challenges. But does Dash have any what's the word I'm looking for right now? Any hopes or goals to start working more with institutions or merchants, or can you speak a little bit to that?
Yes, that would be a huge goal, actually. And to serve that purpose, the Dash Core Group recently hired a marketing, what am I saying? Not marketing, a business integration leadership position, basically. Anyone in the Dash community listening to this afterward is going to cringe that I did not get his exact title right. It's kind of early in the morning where I am.
Yes.
But anyway, the gentleman's name is Bradley Zastro. He stays in New Zealand. By stays, I mean lives. He lives in New Zealand. And he actually comes to the Dash Core Group from having worked on business integrations for American Express. And so it is precisely up his alley, and it's also precisely what the Dash network as a whole wanted. And so the strategy thus far has been to get Dash integrated in businesses that formerly were quite often Bitcoin-only businesses, but as Bitcoin-only businesses, they, more than anyone, were feeling the pinch of the increasing fees within Bitcoin, because increasing fees within Bitcoin meant fewer customer purchases at their business. So just a recent example of one of those types of businesses would be the company BitRefill. And BitRefill has existed for quite some time in the cryptocurrency space, and their main thing is to sell top-up minutes for many, many, many different cell phone providers, payable in cryptocurrency. So not only, well, actually it was Bitcoin only. So not only, could you top up your own phone minutes, but you could top up nearly anyone else's phone minutes in the world with Bitcoin. And so they recently just added Dash as the second coin that they support. Another example is the payments company based in the United Kingdom that largely serves portions of Asia and South America, called Payza. That's Payza. And up until quite recently, they were also Bitcoin only, and have recently added Dash as their second coin. And what's more, the company Bitwage, which has facilitated the payment of contractors basically overseas, kind of making payment of offshore employees cheaper. Bitwage has also recently added Dash. I think it was also added as their second coin after Bitcoin. I'm not quite sure on that, but I think so. And so these are some of the integrations that have been coming down the pipeline as of late. And I expect them to continue, and what's more, to accelerate, I think, potentially rapidly, once this newer version of Dash comes out in the second half of this year. Because the flip side of what will come out with the easier to use stuff from the end user perspective is what we're calling a decentralized API, or a DAPI. And that should allow merchants to get integrated with accepting Dash by just pasting a snippet of code on their checkout page, and now, bim bam boom, now they accept Dash, which merchants are used to, because that's how they integrate with other types of, that's how they integrate with Apple Pay or Samsung Pay or PayPal or whatever. That's what they're used to and what they want. And currently, no cryptocurrency is able to offer that to them. And so Dash should be pulling off another first with that later this year as well.
Okay, very cool. So, Amanda, I'd like to ask you, so the cryptocurrency markets, have obviously taken kind of a big dive over the past couple of months. And unfortunately, Dash, hasn't been exempt from this trend. The market cap has, started the year around 10 billion and it's fallen at this point below 4 billion. So can I just ask you in general, what do you think are the principal causes of this bear market for all cryptocurrencies?
Oh, yes, that's always the the question that everyone wants to know, right?
Yes.
During a downswing or an upswing, the question is really just, why is this happening? And, I don't think I would be any more, pardon me, I think I have to cough for a moment.
Oh, please.
Okay. I don't think that I would have any more particular insight than any other person out there guessing at the reasons, because I do think to a large extent it's a guessing game and people trying to put on, a wizarding hat and gaze into a crystal ball. But if I had to put on that hat, my crystal ball would say that this crash was precipitated mostly just by the mania in buying that came before it.
Yeah.
And so, we see that every now and again in the cryptocurrency market as a whole, a sort of domino effect goes to an extreme. And so I guess it was in December of last year, there started to be a sort of, a little upswing in buying. And that upswing could have been enacted by, very few people or quite a lot of people. There's really no way to know. And as that upswing, got a bit more extreme, I do believe that attracted the eye of many individuals with, maybe smaller amounts at stake than perhaps the individuals who initiated the upswing. Mm-hmm. And that started, what is called FOMO, FOMO, fear of missing out. Mm-hmm. And it inspired a lot of people to just start buying, which in turn inspired more to start buying and inspired more and more and more until we saw in under 60 days, the market capitalization of cryptocurrency, something like, did it triple? I think it might have tripled.
Something like that, yeah.
I'd have to check the numbers, but so that's insane. Mm-hmm. And that level of insanity must necessarily be followed by a correction, because in that level of insanity, you're always going to have a lot of people who are overextending themselves, people who may even be going into debt to buy in. Absolutely. And so those things eventually get corrected out and, the weak hands start selling. And when the weak hands start selling, that inspires more selling and more selling and more selling, and on we go. But, interesting to me is that there's already sort of a little bit of a bounce back mm-hmm. that's happening. And so, we may have reached what some would call the bottom mm-hmm. of this sort of dip, which, surprises me a little, because I thought that it might last a little longer. After the last insane rise and crash, which happened roughly 5 years ago, happened right at the end of 2013. Mm-hmm. So I guess, that's 4 years ago. It lasted much longer. Like, the dip lasted for quite nearly a year before mm-hmm. there was really much of any upward movement, much less a matching of the former all-time high. And so, if this, if this sort of a slight, upward recovery, whatever, increases, I will actually be quite surprised.
Yes. Yeah. Well, we can hope. But we'll have to wait and see. So can I ask you, a few of the Dash core developers have chosen to remain anonymous. And sort of in the world of cryptocurrency, that's often seen as a sign of some shady activity. And of course, I'm not accusing Dash of anything illicit or illegal, but I'm just curious why that is. Why would some of these developers choose to remain anonymous?
Sure. Well, now that I think about it, I think probably no more than 20%, and that actually might be a high estimate, but maybe no more than 20% of the Dash core group is private about their identity. And as they have roughly 60 employees, that's actually, not a lot. There are actually, quite a few more faces and names on the Dash core group that we know than that we don't.
Yes.
But in terms of why, I couldn't actually know the reason that any individual.
Oh, Amanda?
Investor stand. Can you hear me?
Yeah, sorry, I lost you for a second there, but I can hear you now.
Oh, sure. So I was just going to say, from an investor standpoint, I actually don't mind, and I even see the benefit of having, a few key members who aren't known, not in leadership positions, because how could someone be a leader for any long period of time if they've never met any of their followers face to face? That seems a very difficult row to hoe.
Yeah.
So not so much in leadership positions, but in more following positions, like is the case in Dash Core Group, I actually see the benefit, which is we're at such an early stage in our product. Our Dash is only 4 years old. The cryptosphere is only not even quite 10 years old. And with the terms that some people like to assign to cryptocurrency, the disruptive and various things like that, I think it's safe to say that the future of cryptocurrency is not at all set in stone or guaranteed in any sort of way. And so I think there is a level of protection in some key players not being known, because that offers them the word I had just mentioned, that offers them protection, so that in the unlikely event, and I do see this as an unlikely event, that some malicious actor seeks to cause some amount of communicative disruption or, heaven forbid, even harm to known cryptocurrency developers out there, there is safety in the fact that at least some of the crypto developers out there are unknown, and so would not be subject to that kind of attack. And so, so there's a small benefit there. Again, I see that risk as a low one, but it's not non-existent. Like you maybe saw in the news a couple of months ago, someone involved in the high executive and administrative end of a major cryptocurrency exchange went missing.
Yes, that's right.
And there have been well more than just a few people in the world who went to make even some actually who didn't go to make a cryptocurrency trade in an unwise, non-public place. Even just some people whose associates knew that they owned a good amount of cryptocurrency. Those people have actually been held at gunpoint for their wallets. And so while the risk is low, it's not a non-existent risk. And so I totally understand why some, what we call OG, original gangsters or old grandfathers
Yeah.
within the crypto sphere, would want to keep their identities private.
Yeah. Mm-hmm. Amanda, where do you see Dash in 5 years from now?
Oh, golly. In 5 years from now, all I can say is that I see Dash being accepted as a form of payment at a lot of different merchants. And I see that ultimately making products cheaper, because we already buy things from lots and lots of countries outside of where we live. And the thing about buying those products from lots and lots of countries is that we're buying products from people who use lots and lots of different currencies. And so there's a currency exchange going on somewhere in there, and a currency exchange is going to bring with it fees. And those fees ultimately get added to the prices of the products. And so when people are able to transact across borders more easily, and when I say more easily, all I mean is in the same currency, that will eliminate the foreign exchange cost, and that savings will be able to be passed on to the end consumers. And so, so that is what I foresee.
Fabulous. Well, Amanda, that's all the questions that I have from now. Is there anything else that you'd like to add before we close this interview?
Just if any of your listeners are interested to learn more about Dash, although they pretty much know, all of the basics at this point, we do have quite a presence on YouTube. And so just feel free to go to youtube.com/dash.org to learn more.
Okay. Amanda, thank you so much for your time. It's been such an honor and a pleasure to speak with you.
And you, Rachel. Thank you.
Yeah.